Well, hello forensic accountants. Hello from my office here in West Virginia University. And today we're going to talk about the order in which the financial statements are presented, where the current year information is on the left or the right, rounding in the financial statements to the nearest million or the nearest thousand. We'll talk about the sum of the quarterly earnings per share numbers, whether that has to equal the annual number, and we'll talk about Apple and stock splits. So let's get busy. The basic set of financial statements: income statement, statement of changes in equity, balance sheet, and cash flows. This is the order in which the financial statements are prepared. Let's see what the order is in which of the financial statements being presented. So this is sort of the law, the rules. Form 10Q, provide the information. Form 10K, furnish financial statements, and we can see that these statements are silent about the order. So let's have a look. Snap. They start off with the audit report. The first one is the statement of cash flow, then the income statement, then the balance sheet, and then we move on to shareholders' equity and the notes. This is very unusual, starting with a statement of cash flows. Let's look at Facebook. Audit report, balance sheet, income statement. Microsoft, audit report at the end, income statement first, balance sheet after that. So it almost seems as if anything goes. We as accounting professors have to publish or perish, so there should be no surprise that there's an article about almost any possible topic that you could possibly think of. Well, reporting order. These authors looked at a sample of companies in the S&P 500 in 2013. 59% of the time, the income statement was presented first. 41% of the time, the balance sheet was presented first. So this is almost a ratio of 3:2. The statement of cash flows simply once. It's rare. Snap was not listed at that time, so now we know that there are at least two companies that we can probably know of. Now, the order of the years. The current information on the left, the old on the right. Uber, the current on the right, the old on the left. And Snapchat, current on the right, old on the left. But this was not always the case. They changed. It's almost like driving on the left side of the road and changing to driving on the right side of the road. In the registration statement, it was old on the left, new on the right. So it's now new on the right, old on the left, and I think this is my preferred format. So at least Snapchat changed, and they changed for the good. Now, companies round, and it simply says something like rounding to the nearest thousand or rounding to the nearest million. But is there any little bit of science underneath this? Let's have a look. Let's say I have 4 line items, $3.75 each. If I report this exactly, it adds up to 15. But now I'm going to round to the nearest dollar. I round each of these to 4, and my new total, all the 4s, add up to 16, but this is $1 too much. So what I see companies do is they look at the total, they then realize that the total must round to 15, and then they strategically round so that these numbers add up to 15. So in this case, one of these numbers would be rounded down. I just created some random numbers over here. And so these are the exact numbers, add up to 1775. If I put it on the balance sheet, this should add up to 18, because I'm going to round this to 18. However, if I round each of these exactly, it only adds up to 17. So what I need to do is I need to take this one closest, the 49, round it up to 1, and now round it incorrectly up to 1, and now this will add up to 18, which is this number rounded. Let's see what companies do. What I find they do, they strategically do something like this, where they would round up to $1 so that the totals sum nice and neatly. Everybody except for IBM. IBM have a little note, and a number of these in their financial statements. Amounts may not add due to rounding. So they have rounded each of these individually. They have rounded this, and they have not checked or they've not adjusted so that the sum of this equals the total. Indeed, if I add this up in Excel, it sums to 49,145, and we're off by $1, or in this case $1 million. I prefer the IBM way of doing it. Let's have a look over here. Current liabilities. This total rounded is 106,452. They've rounded each of these individually, and when I add it up, it's 106,453. So in this case, it's $1 more. In this case, it was $1 less. I like what IBM do. Now, still on the topic of rounding, let's look at the quarterly earnings per share numbers. This is just hypothetical. A company makes 10.6 cents, 20.6, 20.6, 30.6. If I add these up, 82.4. But when they report, each time they're going to round, and they're going to round up. 11, 21, 21, 31. They've rounded up in each case. They report 4 quarterly numbers. The 4 quarterly numbers add up to 84 cents. In the annual report, the actual number would come to 82 cents, and so the sum of the quarterlies will not equal the number in the annual report. I thought we could look at this and see whether companies are stretching things or fudging a little bit, but then I made a little discovery that I'm going to share with you. Let's have a look at Facebook, 2015, 2014. The reason that I'm going back in time a little bit with Facebook is that I think that Facebook was stretching things in the beginning, but now it's not in their interest to stretch at all. Indeed, I almost think that some of these highly profitable social media companies, it's almost better for them to underreport and to be conservative, or to say things as they are. 2015, annual earnings per share, $29. 14, $1.10. When I go into their financial statements and I look at their note, because they summarize the quarterlies in a note, 2015, these were their quarterly numbers, adds up to 128. Go back. The annual number was 129. Add these up, sums to 110, and we get a match. It matches 110 over there. So I thought, well, we're off by 1 penny. Let's have a little closer look, and let's have a look at Amazon. Amazon. These are the 2019 numbers. Their fiscal year is the calendar year. 709, 522, 423, 647 with the quarterly EPS numbers. I add them up, 2301. I go to the annual numbers, annual, 2301. I get a match, and this looks pretty good. But then I see a little note at the bottom. The sum of the quarterly amounts may not equal. This is due to the effects of rounding, but I don't think there's much rounding here, and changes in the number of weighted average shares outstanding. So I thought, well, let me have a little closer look at this. We'll get 3 examples, and then we'll conclude and move on to stock splits. Okay. Now, I just invented an example. Income, 1 million each quarter. We issued 200,000 shares on April 1st. So for the first quarter, shares outstanding 1. We issued 200,000, so now the shares outstanding go from 1 to 1 plus 200,000, 1.2 million, and it was done on the first day of the quarter, so no complicated arithmetic needed over here. This is 1.2 for the whole quarter, 1.2, 1.2. I do the divisions, and I get earnings per share of $1, 83 cents, 83 cents, 83 cents. Each of these would be rounded down, and the quarterly numbers would add up to $3.49. Annual number. It's still $4 million in income, but let me calculate the weighted average. It is 1 million shares outstanding for a quarter of the year, 1.2 million shares outstanding for 9/12 of the year. Add these two together, weighted average for the year, 1.1 million. Income divided by 1.1 million, $3.48 for the year. Difference, 1 penny. Not much, but still a penny. We're going to issue again, but in this example, we're going to issue closer to the end of the year. We're going to issue more. So, first quarter, second quarter, third quarter, I'm doing the division. There's no rounding at all here. And now I issue 400,000 midway through the fourth quarter. That's exactly the midpoint. I issue 400,000 at the midpoint, so I have 1.2 million shares outstanding on average, weighted average. It is 1 million for the first 6 weeks and 1.4 million for the last 6 weeks. Average of 1 and 1.4 is 1.2. Earnings per share, 83 cents, $3.83. But let's look at the weighted average calculation. It's 1 million all the way until November 15th. So, for ten and a half months, I go 10 and a half, and it's 10 and a half to November 15th. November might be the 11th month, but the start of November is the end of 10 months. So 10 and a half months in takes me to November 15th. 10 and a half over 12 times a million, 875. For the last 6 weeks, 1.5 months, from November 15th to December 31st, 1.5 months over 12, issued 1.4 million, 1 plus 400,000, 1.4 over here, 175 when I multiply across. Add weighted average, 1,050,000. So, 400,000 divided by 1,050,000, 381. Now I have a difference of 2 cents. One more example. And watch the way it goes. The sum of the quarterlies is more. The sum of the quarterlies is more than the annual number. Now I'm going to retire 200,000 shares. So I have 1 million all the way up until the end of September, earnings per share. For the last quarter, I only have 800,000 outstanding. Earnings per share now $1.25, added up, $4.25. Now I need to do a bit of weighting. For 9/12 of the year, 1 million outstanding. For 3/12 of the year, 800,000 outstanding. Multiply across, add, weighted average, 850,000. Calculate the annual number, 4 million divided by 850,000, 470. And we can see 1 penny, 2 pennies, we move the other direction. The sum of the quarterlies is less than the annual number, and the difference is much bigger. It's a 46-cent difference. So, let me know if you like. We can look at this a little closer in another video. Almost done. Apple. Year ended 2019. Earnings per share on an annual basis, 1197, 2018, 1201. Let's look at their note. 2019, these are the 4 quarterly numbers. Add them up, 1185. Does not agree with that annual number of 1197. Add them up, 1187 does not agree with the number of 1201. In each case here, the annual number is more. Let's have a look again. The annual number is more. And what Apple has been doing is the number of shares outstanding has been going down. 5.2 billion, 5 billion, 4.6 billion. So it almost seems that when the number of shares outstanding goes down, the annual earnings per share is more than the sum of the quarterlies. And here we have it. The annual earnings is more than the sum of the quarterlies. The annual earnings is more than the sum of the quarterlies. I thought this was rather interesting, but to make it even more interesting, Apple will now do a stock split. 4-for-1 starting on August 31st, 2020. In other words, 11 out of the 12 months into their fiscal year. Now, the rules say that when you do a stock split, there's no waiting. You need to go and you need to calculate your earnings per share for the fourth quarter as if the stock was split on the first day of the fourth quarter. And it is going to be interesting to see what Apple do when they report these numbers for 2020. Are they going to report, well, this one needs to be split adjusted, but will they adjust these by, in effect, dividing them by 4? And if they divide them by 4, are they going to end up doing some rounding? And so I can't wait to see Apple's annual financial statements. I think it should be very interesting to see a treatment of such a large stock split, and especially when such a large stock split is going to take their number of shares outstanding to over 18 billion. That's very high. So, I've enjoyed our talk. Sorry about that. We looked at the order of the financial statements. We looked at where the current information is on the left or the right. We looked at strategic rounding so that my numbers add up to the total. We looked at whether the sum of the quarterly earnings per share numbers equal the annual numbers. And we had a little look at Apple and stock splits. So, I've enjoyed this. I hope you have too. And from me to you, it's bye-bye.